You are listening to chartingwealth.com for Thursday, the 12th of November, 2015. We always start with IYY, and what do we see with the total market? That's what IYY represents. It's the iShares Dow Jones U.S. Total Market Index Fund. It's an exchange-traded fund. It tracks the whole market, all the stocks. We always start with that, then we go to the S&P 500, and then the Qs, which is the NASDAQ 100, then gold. What do we see happening on the two-day chart? Well, we saw back on the two-day chart on the 6th of November, it had peaked the 2 days prior on the 4th. The market started rolling down, moving down, rolling over. Then we saw the next two-day charts on the 10th, and then today, starting the two-day chart for the 11th and the 12th, we saw the market continue its down moves. Technically, IYY, the total market was down 0.17%. Now again, that's 0.17%, not 17, not 1.7, but 0.7. We do see the MACD and the red signal line coming closer together. We call that converging. Hasn't crossed yet, so we're still technically in an up move, but we have crossed our two-day trend line, which is important. When that's breached, that is when the alarm bells go off saying, hey, the move may be ending, whether it's an up move or a down move. Of course, the market had been going up, so we had an upward going trend line. It's bottom up. We draw it from the bottom up and then top down. When we start drawing a down trend line, we don't start drawing that down trend line until we have a crossover yet. We don't have one yet. So we're still looking at the breach on the two-day upward trend line. We see the derivative oscillator has been losing a lot of speed over the last few days with the down moves. Now, when we look at what happened intraday on our 4-hour or half-day chart, it looks really like the market sliding sideways. Now, it crossed over on the short chart, and a short chart move doesn't make a long chart move. Remember, short charts for little money, long charts for big money. We saw the short chart crossover going down on the 4th, and that is the 4th of November. It's continued to move down since then until it sort of hit its bottom probably around the 9th, the 9th of November. And then it's really slid sideways. It's actually not moved above the down moves on the 9th at this point. In fact, it hasn't closed above the down moves on the 10th of November. So we will continue to watch. It's really sliding sideways. And remember, this sideways slide could be digesting for greater down moves, or it could be just digesting and the big chart's going to start going up again. Now, I don't feel like it's going to, but what do feelings have to do with charts, right? We use the charts to tell us what's actually going on, not listening to the talking heads. The market will do what the market will do, and we pay attention to the charts and not the noise. So that's where we are on the big charts. Let's go now to SPY, the Standard & Poor's 500. That again is an ETF represented by SPY. 500 big volume companies in the total market. And what do we see going on? Well, it looks very similar to the total market. We had a breach of the two-day trend line. We had a red open candle and followed by two down candles over the last several days. We still don't have a crossing over going down. The blue has not crossed over the red, with the red going up. So that means in the blue line I refer to is our MACD, moving average convergence divergence line. The red line is the exponential moving average. Our derivative oscillator has been losing speed. We're still technically in an up move, and we haven't had all that much down movement. Heck, the down movement hasn't been as much as the up movement back on the 4th of November. So even over the last 5-6 days or so, we still don't have as much down move as the market went up over the two-day candle on the 4th of November. So again, sideways sliding, that doesn't make for a down market yet. Technically, S&P 500 was down 0.42% for the day. If we look at the half-day chart so we can get an intraday feel, we see the same thing, a sliding sideways. Of course, the small chart is down, but the derivative oscillator, the downward momentum has been slowing. So let's just continue to watch, see what we see. Let the charts lead us. Still, on both the big charts, the IYY total market and the SPY sliding sideways, still in confirmed up moves. Now let's go to the Qs, the NASDAQ 100. What do we see there at QQQ? Well, we see not a down red box back on the 6 like we saw in the total market in the S&P 500. We see an up green box. And we see then the market over the last two-day candles, red down candles, very small up wicks, so not a lot of up movement, mostly down. What do we see actually happening? Well, we see a crossover, not yet taking place on the large chart. We do see the derivative oscillator losing energy. We will continue to monitor that on the Qs. Now, if we look at the half-day or 4-hour chart, what do we see? Well, interesting enough, we don't see the same kind of sideways sliding. We actually see for all intents and purposes, appears to be, if you look at just the chart of the price movement, a bottoming out. Now, we don't have a crossover going up yet. We do have derivative oscillator losing some speed. Still have a nice distance between the MACD and the signal line. Do have a lot of up movement in the afternoon on the 11th, which was pushed back down by the bears, but the bulls really pushed the market up as far as the NASDAQ 100 went. We'll continue to monitor that. But again, confirmed up move still on the big charts when it comes to our 3 indexes, the total market, the S&P 500, and the Qs. And again, the only reason they're up moves is the MACD is not crossed over yet, so caution. Now lastly, let's go to gold. Gold, lots of down moves over the last many days on the big chart, but what's the chart we pay attention to? Well, that indeed is our 4-hour chart. It has been our magic chart. It has been the good chart. Look at this baby. It has given us one great down move starting back around the 19th of October, great up move starting around the 5th of October, great down move around the 28th of September. So again, where we see these crossing patterns, we're seeing great potential trades. Now, let's look at what's really happening with gold. Gold was technically down today 0.36%, but what's really going on? Well, it looks like gold, it could continue to move down, but over the last few days, it's not gone much below, well, in fact, we saw a potential for a floor in gold if we traveled all the way back to around August. We saw a potential floor on gold around 103.80. Gold has not gone below that. It closed today, that is Wednesday, the 11th, at 103.94. So continue to see and look at what's happening. I'll tell those who are listening by audio, we can see the MACD on gold getting very, very close to closing over and moving up. So let's continue to watch that to see if that actually occurs. Derivative oscillators lost a lot of its speed. It looks like it's getting close to closing that gap and moving over, going up. So let's watch. Maybe a good time for you to get into a virtual gold play. And remember, the reason we use virtual is we are not a stock calling service. We're an educational firm. We do not give you trading advice ever. We want you to train, learn how to do this, experiment, play around, get all the knowledge, get all of the experience, and then you make your own decisions. We do not make them for you. We do not make calls. But please continue to watch this. Let's see if gold is going to be something we can do a virtual buy on. So let's continue to watch. Thank you so much for listening to us here at chartingwealth.com. Hey, if you want to get our free layout, which is the layout that we use here at Free Stock Charts. It's from Free Stock Charts. We use it at Charting Wealth every day. All you got to do is go to chartingwealth.com, sign up to receive our daily chart updates. You also get our weekly chart updates. Every day the market is open, you get this, and you get the video emailed right to you. What else do you get? You get our free stock charts layout, the Charting Wealth free stock charts layout. In addition to that, you get a link to our 15 minutes or so worth of free training on how to read a stock chart. You will find it invaluable to understanding what stock charts are all about and how valuable they are. They're your roadmap to the market. Okay? He who wants to know the future knows it by studying the past. Thank you so much for listening. Go to chartingwealth.com. We'll be happy to share that information with you. Just sign up for our both weekly for the weekend review and our daily email. There's one place to sign up for it right there on the front page at chartingwealth.com.